Hi, everybody. It's Jessica Stone at Stansberry Research, and I've reached Brian Tycangco, Senior Analyst with True Wealth Opportunities China, at his home in the Philippines. And Brian, we are learning that China has leapfrogged the UK and France to become the world's fifth largest home to fund invested assets. What exactly does that mean?
It means that China now has a 4.1% share in terms of the amount of money invested in managed funds all over the world. But that's still very tiny compared to around 50% market share for the US, which is the world's most developed fund market.
And how did China get to this? I mean, it's sort of leaped by leaps and bounds up this list. I think it was at 10 or 15 just like a year or two ago, and now it's number 5. What explains this?
It One word explains it. It's liberalization, the opening up of China's financial sector. So right now, still a very small amount of China's $12.5 trillion in savings are invested in professionally managed funds. And China wants to change that. So they're opening up the industry. They're allowing new players to come in. They're allowing foreign companies to own 100% stake in these businesses in China, allowing them to introduce new products that are catered to all aspects of the market, be it money market, the bond market, and the equity market in China.
You said that is it JP Morgan that was able to buy back the balance of its stakes in China. So basically they're getting more control again, because typically these companies, like so many other companies, have had to share ownership with a local sort of equivalent. That was the condition under which they could do business in China. So they're actually getting more control of their company.
Yes, so that's a big sign of opening up.
So as an investor who's not in China, and I'm not sure how much of my investments are in China, do I want more funds that have exposure to China?
As an investor, you have to weigh the pros and the cons. If you want to invest in China, it means that you want to invest because of the growth that's taking place. But there's also the other side to that, which if you do feel that it's not within your ability to invest in a place like China, there's also other places to invest in to look for growth. But right now, I would say that China offers a lot of the growth potential, most of the growth potential that we're
Hmm.
seeing in the market today.
And you've been doing so much with what you call the homecoming story, where Chinese companies are coming back home. But I would think
Yeah.
if people start spending their savings and they have that much on the sidelines, essentially, that we would also see a lot more companies listing in Shanghai and Hong Kong.
Yes, definitely. There's going to be much more money sloshing around looking for ways to invest in China. And companies are taking notice. They're seeing a huge market now in China. IPOs there in the stock market are being oversubscribed at a rate of, on average, 2,400 times, I think. And, hundreds of billions of dollars being locked up at a time just for, one single IPO. So there's a lot of money sloshing around looking for a place to invest, looking for growth.
I guess I want to also ask what the implications are for governance. There's obviously a lot of investors who would be concerned about how safe their investments are in China, how safe, how much interaction and following of the rules China does in the financial context. We've had this longstanding argument in the US that we were going to see more increased responsibility from Beijing as they became more integrated into the global economy and the global financial system. That hasn't always been the case with trade, certainly, and I think Americans and Europeans are seeing that. However, in this context, do you think we'll see anything different? Is there, with more integration, is there more accountability?
That remains to be seen, but I think that is something we could expect of China. I think that's further down the road. Like you said, China still, although it is number 5 on the world market in terms of fund assets, it's still very tiny compared to the US. So it has very little say in how things are done. The fact that they're opening up their industry to invite 100% ownership of foreign companies in China speaks to their acknowledgement of the need for, better
International
products.
expertise, yeah.
Yeah, expertise.
Yeah.
Yeah. So they know that they haven't set the bar. They cannot set the bar. That they need people to come in, professionals to come in, and this is actually one of the biggest opportunities international companies have, even companies in the US, to be able to tap this market in China. And I think that that needs to be paid attention to going forward, not just trade, but also the opportunities of tapping into the Chinese market. What can the U.S. gain from China? See,
Mhm.
it's not just what they're taking from the U.S., but what can the U.S. gain from China? And there's a lot to be gained now if you just look at the right places, I guess.
And for that, we usually go to you, Brian Tycangco, who is always looking for more opportunities for Americans and certainly anybody who reads your newsletter to make a handsome profit as having reviewed your portfolio. I know that to be
Thank you.
true. Listen, if you would like to see any more content just like this, please do subscribe to our YouTube channel. You can also find us on Facebook, Instagram, LinkedIn, and Twitter. And of course, we'll have Brian Tycangco back anytime he'll have us, and we'll see you next time. Thanks so much. Bye bye.